So thanks and welcome all the participant and panelists to the IIA webinar. Firstly, I would also like to thank the Institute of Internal Auditors for providing us this opportunity. So today's topic of discussion is the board support for IA, and this is we will discuss on positive assurance for large footprint companies. So that will be the topic. So we have the panelists here, and I will be the moderator for this session. Hope everyone can hear me.
Great.
Great. So I think we'll get started. So let me first introduce myself. So I am Nagindra from Protiviti Bangalore. I work as a managing director at the Protiviti Bangalore office in the internal audit and financial advisory team. I have over 23 years of experience in internal audit and risk management. I have led several internal audit assignments for large listed companies across diverse industry sectors. Prior to joining Protiviti, I was with another leading Big Four consulting firm in their risk consulting practice. I'm a certified internal auditor and a qualified lawyer. On the topic that we have today, on the providing assurance to the large footprint companies. So, as you know, that the range of uncertainties that are being faced by businesses around the globe in 2021, it was overwhelming. Challenges triggered by airborne virus, which created pandemic, continues to unfold with numerous risks. In addition, ever-present challenges ranging from changes in technologies, changes in marketing strategies, emerging risks and opportunities are making it increasingly difficult for the businesses worldwide. Leaders of organization in almost every industry, size of the organization irrespective of the size and geographic location, are being reminded too frequently that they operate in what appears to be most to be an increasingly risky global landscape. In this session, we will focus on what is currently on the minds of board of directors and executives, how management and auditors are working to fulfill the objectives of the board and provide assurance to the board on risks and controls. Now, what are those strategic areas that need to be part of IA Charter? And lastly, we'll also look at, from a technology standpoint, how it is helping as an enabler in providing positive assurance. At this point, let me introduce my panelists today on the call. We have Shrirupa Ora, the former Group Director and CFO of IDFC Alternatives. Ms. Rupa Ora was the Group Director and CFO at the IDFC Alternatives for more than a decade and earlier, CFO of Indian operations of Antwerp Diamond Bank and KBC Bank NV. She was also associated with Callion Bank and Oman International Bank. So before joining the corporate world, she ran an independence practice, her own practice. She has been a member of the jury for CFO Awards 100 by the CFO Institute and has been conferred with Women Leadership Excellence Award at the BFSI Awards 2013 by the Institute of Public Enterprise. Mrs. Ora has featured among India's 10 most influential women in finance by Rediff in 2012. She's an independent director on corporate boards. She's a fellow member of Institute of Directors and a lifetime member of Independent Directors Data Bank of Indian Institute of Corporate Affairs. She's a member of CII's National Committee on Financial Reporting 2021 and 21-22. She's also involved with the Art of Living and the Nalanda Dance Research Center. Please welcome Mrs. Ora on the call. Secondly, we have Prathimar Ram. She's an experienced banker with 3 decades of experience in corporate, international investment, and retail banking. She's worked in India, USA, and South Africa. She has held position of the CGM and the country head of United States operations of SBI New York. And prior to that, she was the CEO of South African operations of the bank, based at Johannesburg. At SBI Capital Market, she assisted companies in raising funds through capital market instruments and led corporate advisory, M&A, and project appraisal business. On leaving the public sector, she joined private sector in the infrastructure and oil and gas space as Group President Finance at Punjloyd Group. She later was the CEO and the whole-time director of India Infoline Finance Limited, a non-banking finance company focused on lending to small businesses, real estate, and healthcare sectors. She's currently an independent director and has exposure to the boards of corporates in the electrical, auto, textiles, pharmaceutical, energy, healthcare, mining, industry, finance. So she's currently on the boards of Cadila Pharmaceuticals, Minda Corporation, Manappuram Housing, and she also mentors startups in IT, renewable energy, and agriculture sectors. She takes keen interest in mentoring and advising medium-sized corporate, using her expertise gained in corporate banking, forex management, risk management, as well as experience gained in public and private sector industry. She graduated from University of Virginia, USA, and Bangalore University. So welcome, Mrs. Prathima. Now we have the third panelist on this webinar is Shri Bhaskar. Bhaskar is currently the CFO for Bangalore International Airport, and BIL is one of the first airport in India under the public-private partnership, handling about 30 million passengers per year. In his 4.5-year tenure at BIL, he has worked on the development program and arranged financial closure close to 2 billion capital expansion program, aimed at doubling BIL's capacity and developing a world-class airport city. He has been championing the digital transformation journey at BIL, overseeing the strategic decisions, including contactless travel, paperless workforce systems, and IoT-based asset management tools. He also had the arduous task to ensure sustainability of operations during COVID pandemic environment, while supporting other business partners and keeping employees' costs intact. Prior to BIL, he has worked as a chief strategy officer for a large international conglomerate in UAE and also energy sector CFO and the CFO of corporate division of the GMR Group. Apart from that, he has also founded a retail startup in the small format supermarket space in Bangalore, growing it to a 50-store chain with a successful disinvestment. Recently, he was awarded with the CFO of the Year Award 2021 for infrastructure and RE sector by CII under their CEO Excellence Awards 2021. Welcome, Mr. Bhaskar. Now we have we have directors. We had CFO. Now we have people from the internal audit leadership. We have Pariksit Acharya, who is currently the director and internal audit heading the global and data analytics, professional practices, and forensic practice within the corporate internal audit team of the Hewlett Packard Enterprise. And HPE is a 28 billion global enterprise, and is based in San Jose, California. Now, Pariksit has about over 20 years of experience in internal auditing, risk management, and finance across the various industries, and risk consulting in EY. He is a chartered accountant, CIA, and CISA with a bachelor's in commerce, and is actively participant in professional forums, and he has contributed several thought leadership articles in professional journals by IIA and ICAI. Welcome, Pariksit. Lastly, we have Manjula Tushara. Manjula Tushara is the head of risk and control of TJ Lanka PLC and its subsidiary. TJ Group, considered to be the largest textile group and knit fabric provider in the South Asia, with over 250 million of revenue, as well as 300 plus people working. TJ customer portfolio includes global brands like Disney's, Calvin Klein, Victoria's Secret, Marks and Spencer's, Decathlon, etc. And it has planned to start businesses in Asia hub, in India, Bangladesh, and Japan. The company was recognized both in Sri Lanka as well as internationally for the best corporates, being rated by Forbes as one of the best corporates in Asia under a net worth of $1 billion. Manjula counts over 15 years of experience in assurance, finance, commercial, and presently heads the risk and control. He's graduated from University of Shri Pura, Sri Lanka, and masters from University of Southern Queensland, Australia. In addition, he is also a fellow member of Institute of Chartered Accountants of Sri Lanka, as well as associate member of Chartered Institute of Management Accountants UK. Welcome, Manjula. So we have now, so we have all the panelists, before we get into the topic, um, we spoke about what is the kind of the, topic and agenda that we are going to discuss. My question to the audience is, what do you think will be top on the board or the audit committee agenda from a risk perspective, particularly from a large footprint companies? We'll quickly start a poll, and we'll give a minute or so, and then we will, after this poll, we will talk to the leaders and understand their perspectives. Tushar, can you start? Can people see the poll on the right side of the screen? Yes. Okay, just bear with me. I have some issue with my computer. Okay. Satish, it shows me poll has ended. Okay, great. I think what we see here is 43% think that digital and technology are the top, is the top thing, on the minds of the leaders, followed by market conditions and then regulatory changes. So now, before we get into the individual topic discussion, I would like to invite or talk to my co-panelists and understand their perspective of the topic, before we get into specific points. Rupa, would you want to go ahead on the overview on this topic?
Sure, Nagindra. I think internal audit is an important third line of defense and really provides assurance that is relied upon. The analogy that internal audit is a critical component of the organization's navigation system really works well with me, right? Just like once you tell the navigation system the start point and the end point, you'll get the proper result, and the navigation system really helps you to navigate the route and tells you if there's a congestion ahead, guides you if you've missed any U-turns, etc. And similarly, if you have an internal audit charter that is agreed and is properly laid out, then it provides assurance to the organization in progress that you're progressing on the chartered route, that you are taking the recommended corrective actions. If you've missed a U-turn, you're taking it right. It identifies the risks much in advance, to like a navigation system, to tell you that there is a congestion ahead, or there's an accident ahead, or move slowly or take another route. And it alerts managements and boards of compliances and risk failures, right? Provides assurance that the organization has arrived at. So I think to succeed, organizations must manage risks, not only internal control and operational risks, regulatory and compliance risks, but also strategy, technology, and cyber and reputation risks. While organizations are raising the bar on effective risk management, in today's VUCA world, which is full of volatility, uncertainty, complexity, and ambiguity, we have witnessed risks that are changing fast, and it makes it imperative to have an alert, vigilant, agile, and nimble internal audit team that works along with business heads, analyzes trends, networks with peers, regulators, and other stakeholders, and alerts management with the changing risks and opportunities and the probable disruptions. Audit committees today are engaged in setting an effective internal audit charter, ensuring that competent internal audit resources are available to understand ever-changing risks, examine them, and report meaningful insights that add value. Internal audit is recognized as the eyes and the ears of the audit committee. I'm very happy to be a part of this diverse panel to discuss this important topic, and I would like to thank IIA and Protiviti for this opportunity. Thank you,
Thanks,
Nagindra.
Shrirupa. We also look forward to hear from you. Prathima, anything that you want to add, and what are your views on the overall topics?
Yeah. So I looked at that poll and it said 43% on digital, and rightly so. But though it is 43%, let me tell you frankly, at the board level, we are still not tuned into this digital phenomena as yet. Largely, I'm saying it's not that doesn't happen across the board, but largely. But it's beginning to happen, and you will see that as and when corporate boards have more of IT specialists on the board, you will see that sharp impetus coming on looking at the digital issues that we should look at, which you're not looking at in such great depth that we should. So just wanted to say about this, what happened at the pandemic, okay? It was sharp, intense, and very, very sharp. So the first thing that happened, and I know that, you would have seen that in the newspapers as well, that many of the companies, we had cyber attacks. And for the first time, all of the board said, oh, what was our IT policy? Now let's look at the IT policy. And then we looked at, our IT internal audit team, the auditors, to guide us as to what we should do next. Where do we get very strong specialists in cyber security to look at vulnerability testing? Going forward, this is going to be a major thing for us. And I don't think we should go to search for specialists. It should be part of the IT team that we hire, that we take on service. So that's one thing. The other thing that that happened to us at that point of time was, okay, so we sort of settled down. Okay, fine. We had supply chain issues. Okay, we settled down. But then the next level that we started looking at was on digitization and automation. So many of us felt that we had done a lot, but then we realized we had not done enough. And then we need to do a lot of catching up.
Right.
So a lot of digitization, the automation, the process started. And then we all realized, quite a number of us realized that the IT audit, the way it should happen, or the focus that the board should give on it, and the frequency at which we should give for it was not happening. So, of course, the overall IT policy, so on and so forth, we started looking at all those matters. But then as we started on the journey of digitization and automation, many companies, some at various levels, but all of us were doing that. We realized that we had digital assets which were not giving us optimal output. And we didn't realize it. And we were spending crores and crores of rupees on it every single year. So hopefully, as we go forward in this journey, we hope that the the audit team would be able to evaluate and tell us where are our weak spots in our digital assets, the utilization of digital assets.
Sure. So, sorry, go ahead. Sorry to interrupt.
And the next thing is, of course, the impact was also on the supply chain, as you would have all read about it and you would have come across that. And of course, we did the usual analysis of content intensity, percentage concentration on, on the products, country, sources, so on and so forth, both on terms of marketing as well as in sourcing. But now I feel that we will be getting tools which will help through AI and ML help us to do far more analysis. But we always wonder, whether our team are utilizing it optimally. Whatever digital asset we get, are we utilizing it optimally? So we look up to the audit team to guide us and to make us understand that have we used it properly? Are we using our very expensive digital assets properly? And more important, we like to have from the audit team their experiences across the sector, their experiences internationally, and definitely their experiences globally in the sector that that particular company is operating, and keep advising us. I'm sorry to say that doesn't happen to the extent that it should happen, but I think with all the tools, especially the digital tools, both internal audit as well as the company will be getting as we go along. They will be able to help us and guide us as we proceed in the matter. So these were just some initial thoughts on this. So digitization to me definitely, and the analysis, the audit of it is going to occupy our mind as we go forward.
Okay, great. So that's interesting. So I'll come to the specific things on the mind, and I have a couple of other questions. Before that, let me check with Bhaskar. From this entire discussion point of view, what are your initial thoughts from a management standpoint? Now we heard from the directors. So what do you think from a line one of defense? What is your initial kind of overview?
Nagindra, I was also looking at the poll that you ran, and I thought you missed one bullet, all of the above. I wanted to put it on all of the above.
Yeah.
So basically, the last 2 years have accentuated the risk profile for almost all companies, and especially in the aviation sector that we are. We've sort of faced all sort of risks that would have been there in the books. In a sense, we faced people-related risks. With our frontline employees out there, fighting and making sure that the airport is operational. We faced cash flow-related risks. All of a sudden, on a particular day, poof, our entire revenue is out. There's no revenue for 2 months. And that was the first shock, and then we had many more after that. The third was that we were in the midst of a massive expansion, putting an airport within an airport, and there are no workers. They've all migrated back to their villages. COVID was a risk which defied all our strategies, which defied all of our BCP process. And at the same time, the cyber risk got accentuated during this period. We've seen that more and more every business, and accordingly airports, we become more and more digital. I mean, we are as much a digital airport as a physical one. And as you become more digital, the risk of cyber risks increase substantially. And in this process, the way we could build our defenses, the way we could build our organization to face some of these risks have been what you mentioned. The first was to have a proper ERM and a BCP, which is agile and which continuously evaluates and reevaluates risks, bringing the top 10. In fact, last 3 years we had different top 10 each year. Okay.
Right.
And the second line again is the management. Being alert to all of this, being agile, and the more important, the internal audit, internal controls getting stronger. As a CFO, I would look at all of this, making sure. And in fact, for cyber-related risks, we had a separate cyber audit being done to understand our maturity levels, to understand the risks that we face. And we internally provided a cyber security cell, and we had external agency doing a cyber audit so that we get that assurances.
That's an interesting point. I'll come to the cyber, specific to cyber. I have a point to discuss, but before that, let me find out from the internal auditors. So Pariksit, what is your overall thoughts on this topic? On the assurance, from a IIA standpoint.
Yeah, sure, Nagindra. I would start with an apology for my voice, though. I'm having a bad throat today, which is a scary thing in this day and age, but thankfully I'm fine. So please bear with my voice, and thanks for having me over. I think a lot has already been said by my eminent co-panelists, which I think even as an internal auditor, I completely agree with. The only thing I would add is, considering the pace of disruption that's happening, whether it's digital, regulatory, or black swan events like COVID itself, right? Which probably is not black swan anymore. Now people have come to expect such things. It's obvious that the board is looking towards internal audit to be the navigation system, as Rupa rightly pointed out. Now, there are obviously a lot of challenges to that as well. And it's a symbiotic relationship, I would say. While the board, the audit committee expects a lot from internal audit, and rightfully so, I think internal audit also conversely depends a lot on the tone at the top and the support from the board. Because unless we have that, we cannot really go out and have the right access to the right data, to the right people, and to the right information to provide insights that the board rightfully demands of us. So if I look at the topic, and I agree with Bhaskar as well, I think all of those things you had listed there are certainly key top of the mind items for companies across the board, across the industries. And it resonates with us as well. And one of the ways we have been trying to manage that is by integrating internal audit closely with ERM, enterprise risk management. So, in fact, in our company, internal audit and enterprise risk management are both under the same leader, so that you have close-knit integration and two-way sharing of information. So there's both a tops-down risk assessment as well as a bottoms-up, risk assessment, so that we are always auditing the risks that really matter to the board and the senior management. Now that's my take on this.
That's great. Manjula, any thoughts? Manjula, we can't hear you.
Good evening, Nagindra. Can you hear me?
You are. You have operations in Sri Lanka, and I know now currently Sri Lanka is in a bad situation, especially from a financial turmoil standpoint. So it becomes extremely important as an internal auditor for you, for the company as well. So what do you think? The overall on the topic.
Yeah, Nagindra. Basically, COVID tested us in all the ways, in my opinion. And it has been open new avenues as well. Let's say even within the organization, even within the competition. These days, let's say the competitors are more collaborative than competitors, in my opinion. And internally also the same. Because previously, like internal guys are basically the rule book driven and quite of a demanding people. But nowadays, our equation within the internal audit and enterprise risk management or the risk management, we have to have an equilibrium, the balance. When you go to the risk management, that we have to keep our integrity and we should not impair on our basics on internal audit. By the way, we have to collaborate with the risk management. Otherwise, we won't cover the business risk. End of the day, being internal audit, we are an employee of the organization. Then the business risk is the big, even though you are playing the internal audit role or the, let's say, the operations role. So in my opinion, this situation creates more collaborative roles within organization, as well as the control environment or the risk assurance piece became more prominent compared to the internal audit. Because that is so volatile. The internal audit is capturing all and giving the specific answers. How fast you can do, how effective you can do is questionable. As an example, in my organization, all the service departments over 2 years working from home. You don't have physically anyone in office to meet and do audit. Below me, then how should I manage the situation?
Right. So that's an interesting challenge. I have a question on the challenges. That we will come to the later. Now, so just let me go back to the independent directors. So I have a question on the I think Prathimar touched up on the point that what are some things that are on her mind. So my question to Rupa, what are some of the key things that are there running in the top of the mind of of the directors from a risk standpoint? Like, let's say for next 2 years, what are some of the key risks where you need more assurance from the internal auditors?
Very pertinent question, Nagindra. And as you know, the constitution and the terms of reference of the audit committee is prescribed by the Companies Act. The Act provides the audit committee comprises at least 3 directors, and independent directors form a majority, right? It also lays down the terms of reference of the audit committee, which are so broad and onerous, right? given that a majority of the audit committee is not involved in the day-to-day operations of the company, but needs to provide assurance to the board and the stakeholders on various matters, and is one of the main pillars of corporate governance system today, it depends upon the internal audit function to provide meaningful insights, right? Because without that, we cannot do it. And insights that will not only protect value, but enhance value. So effective audit committees don't limit the role of internal audit only to providing assurance over regulatory compliance, internal control environment, and fraud risk assessment, but internal audit needs to ensure the effectiveness of enterprise-wide management framework, right? Risk management framework. The team needs to be more agile and aware of evolving trends, risks, and opportunities that they bring, and they need to benchmark industry best practices. Internal audit needs to have a keen eye on cybersecurity issues and check any vulnerabilities and any data breaches. It also needs to look at the ESG framework, the environmental, social, and governance framework, and reporting to ensure that the reporting is true and fair, right? Internal audit needs to lead the way to promote integrated thinking, integrated reporting with a focus on business responsibility and sustainability reporting. Internal audit needs to have a look at the working of the whistleblower mechanism. Related party transactions need to be scrutinized to confirm that these are at arm's length and in the ordinary course of business and in the best interests of the company. And internal audit should also evaluate employee satisfaction surveys and check trends in behavioral patterns and look for red flags indicating a change in the culture of the organization. Breaches of the code of conduct needs to be seen by this IA, and IA needs to check if there are any other insider trading issues, KYC, AML issues. I mean, the list is just unending.
The list is endless. So if you were to look at top 5 risks that are there in the mind, I see things like cybersecurity.
I think cybersecurity, enterprise-wide risk management systems, code of conduct, KYC, all those things are very important. Yeah, right. Yeah, and even behavioral culture of the organization. I think internal audit needs to also be the first point of contact. So the go-to person kind of, where business leaders will look at internal audit as a partner to provide inputs on the risks and challenges that they see before they introduce any new product. That's the kind of business partnership I would think that
risk before product introduction. Okay, so these are great insights. My question to you, Prathimar. So you already said that digitization, automation, is a concern. Focus on IT policies, and especially given that COVID situation, on the cyber security breaches, impact on supply chain. You added all this, but my question to you is, you have worked in banking, and now you're on the from a non-banking side. From a public-private company standpoint, what do you think some of the key risks that one should keep in mind, especially from an internal audit standpoint?
Yeah. So, the point that Pariksit made, first, I think that's the most important point to which not many companies pay much attention as of now, is that integrating internal audit with the enterprise risk management. They now work in separate silos, and some top 10 risks are identified, which the internal audit team is not aware of. And I'm not talking about strategic risk. I'm talking about process risk, enterprise risk management in the process. So that integration is an absolute necessary, and that focus, I don't find much attention being paid to that. So that number one, I think, would be my agenda as we go along into various boards that I am. And the other thing, of course, the usual market, regulatory, all that is there. That will always be there. But the new thing that is emerging now, and which will also be disruptive in some manner, not as sharp as the pandemic was, but it will change the way we operate. And that, I think Rupa or somebody else had mentioned the ESG framework.
ESG
now, yes. So, the way we, of course, E stands for environment. We all know that, the greenhouse gas emissions, water intensity, waste intensity, so on and so forth. So the way we function, the way we think will start changing. And if we don't imbibe that as a part of your culture, which is a very interesting comment that, one of the panelists made, Rupa made, in fact, on behavior. I was wondering which internal audit does that. Sorry, Rupa, but I have not come across that. But that is very, very important because we just can't depend upon the whistleblower. So coming back to ESG, that is going to be very important as we move forward because the S part covers HR and, of course, CSR. And G is, of course, governance. And in the HR, there are very, very interesting aspects on human rights, of course, on training and safety and so on and so forth. So that, I think, on boards, they will start paying more attention to the HR aspect than what we are doing currently. We are, but not to the extent that we will as we do that now, when ESG becomes part of the way we function.
Great.
So, so one is, of course, integration with the risk management, another one ESG, and the others are anyway ongoing things.
Correct. Just one question, before I move on to from an internal audit standpoint. Succession planning, people think that risk has been there for several years, as one of the top risks in all the surveys. What do you think, from a succession planning standpoint, is it still a risk that you see in the, businesses, where it's still an open risk?
So you're asking me that question, Nagindra?
Yeah.
Yeah. Okay. So in terms of succession planning at the management level, more or less, it may not be very well categorized or documented. More or less, the second person is gets somewhat trained. And anyway, the board interacts with the second person also. Many times they interact. So we get a fairly good sense of what is happening at the management level. But then, as all of you know, most of the companies in India are promoter driven. That is where the real issue is. So while some documentation happens in some form or the other, but that, of course, we need to give some attention to it. But then, of course, that's not the internal audit. No, I mean, I don't know whether it comes under the internal audit, but that's more a board responsibility.
Yeah, I mean, I'm seeing from an assurance standpoint how our internal auditors helping to see that the right processes are in place from a succession planning.
I've not seen them talking on this. Sorry, I mean, I've not come across it. Maybe they have to do it, or we have to do it rather, but I've not seen it.
Sure. So we will quickly move on to internal audit. Before that, there's another poll on, so we have heard from the leaders, the directors, that what their expectations are. Now let me check with the audience. Tushar, can you go display the poll for the second question that we have? So this is basically interesting. So well, there is an expectation, from a board standpoint and the independent directors. Now let's see what are the typical kind of challenges faced by internal audit in making sure they provide that assurance. I put 4 broad topics over here. Knowledge and experience team. Sometimes you see there's a diverse set of audits that is required. The skill set that is required. Is that a challenge? Second thing is digital adoption, which again is because the ever-changing technology, attrition, or lastly methods, processes, frameworks. So let's see what participants have to say. Okay, the poll has ended. Tushar, can you just display the results? Okay, digital adoption and technology is 45%, 24% knowledge or experience, methods and processes 20%. Okay, that's interesting. 45% people feel that digital is a... Okay, so let's move on, and this question is to Pariksit and Manjula. So let me start with Pariksit. So now you heard the expectation from the board, etc. Now, how do you, when fulfilling these objectives, what would be your, kind of design, or, how do you close the gap? Any thoughts on that, Pariksit?
Yeah, certainly, Nagindra. And it's interesting to see the results of the poll as well, because I think at least top of mind, there are two or three things that come to mind, and I can clearly see a couple of them there. The number one challenge I think we all are facing is talent, right? We are living in a world where we are hearing terms like the Great Resignation. I mean, there's hordes of people, professionals resigning and moving to other jobs or even taking a break and so on. So this has obviously resulted in a war for talent, because if you look at internal audit also, it is no longer the sole preserve of accountants, right? In internal audit today, we need to have a diverse team with a lot of different professionals. For example, as someone said earlier, you need IT professionals, you need cyber professionals, you need programmers as well. And these people are also being pursued by other departments, right? It's not just internal audit. These skills are required for others also. So the war for talent is, heated up. And internal audit has to somehow show our value to attract these individuals and retain them as well, the right kind of talent. So unless we have the right talent and skills, there's no way we can actually provide the required level of assurance to the board, because obviously the board rightfully expects internal audit to do a lot of strategic audits and assurance work as well, like auditing culture and tone at the top, and even ESG for that matter, where I think standards are still evolving there, right? So what do you really audit against? So you need the right skill set. So talent is a huge challenge. And I would say the second point is that comes to mind is certainly digital technologies, and I would expand that to say access to the right data. As someone said, data is the new oil, but then you need to access the right oil. If you put, for example, if you put petrol in a diesel engine, it's not going to work. So how do you get access to the right data? And with all the digital transformation happening, especially in a large company, in a global company, it's very difficult sometimes to get to the gold source of truth, right? Because there are somewhat differing versions. There are so many legacy systems. There is so much of sometimes manual offline work happening, etc. Unless internal audit can access the right data, we cannot provide the right insights and assurance to the board. So that is another key challenge. The third challenge, maybe the last one that really comes to mind, top of mind, is something inherent in our profession, where I think there is sometimes there is still a perception that internal auditors are fault finders, right? People look at us as policemen, and that is something we have to constantly keep changing by proving to the business that we are real business partners. We are not here to find faults. And I'll again borrow Rupa's analogy earlier, right? Some people don't look at us as the navigation system. They look at us as the brakes in the vehicle. They are like, okay, audit's here, now they're going to put a brake. But yeah, now, yeah.
So that's interesting. So, I mean, what is your strategy in HP? How are you trying to close these, gaps that you have? What is some of the leading practices that you have to bridge these gaps?
Yeah, certainly. I'll start with the last one because that is more inherent. We are blessed with a very supportive audit committee and a very mature senior management, our CEO, CFO downwards, who really understand the value that internal audit brings. And that helps a lot because the tone at the top really sets it. Now, when you go deeper in the organization, maybe there are folks who have not been exposed to internal audit, so they don't really understand what we do. So we try to partner with them. We try to make sure that we are not just going there and raising observations, but also try to see if we can identify some best practices that they have that can be highlighted. So that way you build credibility. And also another way is to try and constantly partner with the second line. There are multiple compliance organizations which represent different BUs. So we try to have a constant dialogue with them, openly share our audit plans. We never go and say, okay, here we are here for a surprise audit. No, that's not the way. We give them advance notice. We tell them what the audit is about, what the rationale is. So try to build that partnership and credibility so that they start looking at us as business partners and not as policemen. On the talent bit, yes, it is a challenge, but some of the things we're doing is providing job shadowing, job rotation opportunities, providing more challenging assignments to the skilled workforce so that they feel they feel and they can see the impact their work is having, right? Because it's not just about pay. People feel valued when they can see the impact their work is making. So that's another way we try to manage our talent attrition. And on the data bit, yeah, that's an ongoing bit, because we are also undergoing a lot of system transformation. Again, the idea is to partner with the business, closely have dialogues with them, so that we know what changes are happening and we can be on top of it.
Great. So I also know that you are leading the the automation and digital for the internal audit. So I have a question for you on that. So, but hold on. Before that, Manjula, any thoughts from your side? You want to add anything to what Pariksit said? From a how do you meet the board expectation and make sure these whatever the gaps that are there that you close them?
As Pariksit mentioned, almost applied for us also the same. In my, I mean, the Sri Lankan and TJ perspective, I would say that agility is one, and the set of soft skills also really important. Even the internal audit team, basically, I prefer with the kind of a young and like millennials, basically, who go getters and who can get along with the operation team, could do the job, because end of the day when it comes to TJ, all the operation guys are the masters of that particular activity. That's why they are. Let's say when our operation, when it comes to fabric manufacturing, it's a kind of skillful job. I mean, there are machines, but end of the day, it's a kind of art. It is not per se it's coming out like when something put, you can get something out as a standard process. So with that, we have the masters in the operation. Then if you have a right set of people, even in the risk and control team, who can get along with the operations, we can play the collaborative role. That's what I mentioned previously. Because when it comes to the fashion industry or the textile, the brands itself, let's say Victoria's Secret, Nike, they themselves conduct audits. They themselves look at our ESG framework. They themselves looking at our carbon footprint. A lot of things we inheritedly have to report. Inheritedly we have to control.
Right.
The social aspects are also the same. Even minimum working hours and all this, so much of list. When it's come to at least one each main audit is covering one aspect of a main brand. Like that, when we deal with 7-8 main brands, so-called everything is mainly covered other than the local statutory requirements. The more important for me is the agile team, who can work with the experts.
Great. So basically, if I have to say that people, I think you kind of resonated what Pariksit said. People is critical, and so I agree with that. So Pariksit, I have another follow-up question to you. See, this, Institute of Internal Auditors have revised their the entire framework, and they have changed the principles and some standards as well. Do you think, the new models, methods, what is the how effective is it in the current situation? Any thoughts on that quickly?
Yeah, you're right. I think the IPPF, the International Professional Practices Framework, has been revised. But that said, I think the components of it, the standards, the code of ethics, the core principles, I feel these are timeless, right? And which is a good thing for us, because for any profession, you need to have those constant principles and standards. That's how people can then place trust on your work. So in that sense, I think it's certainly the IPPF is timeless, and even the revisions, that's a good thing, that there is flexibility within that framework to adapt to the changing business realities. One example I can take is something like the 3 lines model, the 3 lines of defense model, as it was called earlier. Now that saw the 3 lines in sort of silos, but I think in 2020 IIA revised that model to bring out a revised 3 lines model, and you'll notice that they actually dropped the words defense, because one of the criticism for the earlier model was that it emphasized defense, which meant it emphasized risk management as only looking at the downside. But in the current world today, if you look at internal audit or any risk management function, I think management expects to also take a look at the upsides, not just the downside and the risks associated with it. Look at the opportunities also. So the IIA made that tweak, and they also changed the model from what was earlier a siloed model to a more integrated, cohesive one, where they're emphasizing that sometimes the lines may blur, and more importantly, you need to have I think, two-way ongoing communication and integration. So yeah, in summary, Nagindra, yeah, you're right. I think the IPPF changes have been very relevant. And while we have the standards which are timeless and constant, but there is room within that the IIA has given to adapt to the current situation.
Right. So when you develop your internal audit charter right now, so we heard from Rupa, we heard from Prathima, the list of risks and their key areas, their focus areas, right? And we heard from Bhaskar on what are some of the areas. Do you believe when you develop an IIA charter and when you do a risk assessment, what do you think should be the top priorities that you will consider?
See, incidentally, it's funny you're asking this because just a couple of days ago we submitted our charter for approval to our audit committee, and we did not make any major changes, to be honest, because what we have done is we have modeled it completely on the IIA guidance. So the IIA has clearly set out what a model charter should have, what are the key elements that should be present there, whether it's the purpose of internal audit, the scope, the authority, the responsibility, the interdependencies with other organizations, and so on. So I would say as long as we are having all those core principles embedded there, they can apply to any situation. Because the way I look at a charter, Nagindra, is it's somewhat similar to the constitution of a nation. Right. We're not supposed to, and we don't actually revise it very frequently. So as long as you've got a solid constitution, solid charter in place, there can always be other operational things that happen, in a policies or procedure document. But the charter really is the bedrock, which for us, we have modeled it purely based on the IIA guidance, and that is reviewed annually by our audit committee, and even before that by our legal counsel and so on. Yeah.
And I have another follow-up question on the risk assessment that you do. Now you saw the risk that is evolving, right? So if you heard from Pratima, you heard from Rupa, you heard from Bhaskar. How do you frequently revise the risk assessment, and how do you make sure that you bring in these areas which are more relevant for the audit committee or the board and prioritize them? So what is the kind of risk assessment or the best practices that you follow?
Yeah, so we have a dynamic risk assessment model, which means it's ongoing. We do plan for audits on a half-yearly basis, but then that's not cast in stone. It's just more for administrative convenience. Yes, there's a 6-monthly plan, but then it's very flexible, it's very agile. We keep changing it as and when some hot risk comes up. And I go back to what I said earlier. For us, the advantage is we have integrated ERM with internal audit. So ERM is right there in front of senior management and in front of the board, in front of the audit committee, and that tops down risk assessment then percolates down to our audit plan as well. So that way, there is because of that close knit integration, we are able to constantly upgrade our risk assessment and make changes as required.
That's great. Manjula, any thoughts on any practices that you follow in terms of risk assessment?
Yeah, for us also the enterprise risk management is the key. That is where you find out where the areas to be focused and area to be worked on. Because at the end of the day, you basically deal with the business risk. Other things, basically the geopolitics and all those things, even the implication we can see it. If I take the small example, like these days, textile industry facing with the traceability issue. Basically, our brands are asking where the raw materials are coming from.
Right.
Then end to end, we should be able to prove from where the material we have taken, what the process we have done. It has not to be mixed up within the process, and even up to the farmer, we should be able to go back. That's the expectation. So when it came out from the customer, where the customer is again the business risk, where the business risk get assessed on the enterprise risk management. As everyone giving the focus nowadays, the focus has to be ourselves, because that means the business risk is the highest risk, where it can be captured through the enterprise risk management. And then you can have a different methodology of mitigating risk is a different thing.
Right. Right. No, that makes sense. So in terms of, I'll go back to, the interesting point on the digital transformation which we spoke about. Bhaskar, my question to you, on the transformation and IT enablement on the radar, most companies with especially large footprint, even your company has been one of the front runner, right, in the digital footprint. According to you, can you walk us through what is the digitization and technology that help in driving the IA mandate and providing more assurance to the board and other stakeholders?
So, Nagindra.
So from a management standpoint, first line standpoint, you can talk, and then I can go back to Pariksit from a internal audit standpoint.
Yes. So today, taking from, let's say, a CFO's perspective, digital transformation has been one of the key drives that we did during this COVID period.
Right.
And our objective in all this digital transformation was to drive efficiency, was to do cost optimization, and was to increase productivity. Now, on a flip side, you would also see that these have helped in improved controls, in more better usage of the data, and so what we did was we did 4 different platforms on our entire digital transformation. One was inward looking, which was to employees, which manage the entire workflow, data management, and data archiving. One was on the customer side, where which would more focus on revenue enhancement. The third was on the business analytics, and the fourth was on the management of our maintenance program, basically asset management platform. Now, the way we looked at was to making sure that data generated in one of these platforms get into the other platforms where we could derive much more insights into our business, as well as making sure we get into better data utilization. In addition, we also put a lot of other automations like RPA, compliance management system, etc., which at the end of the day was to some of these were to minimize risks on compliance, minimize risks on financial, which and plus also help us on the productivity. Now, of course, from our perspective, at all times we wanted to make sure dealing with so much of risk, some of the risks which are uncontrollable, they are risks external to the organization. At least those risks which were internal to the organization, we wanted to have a better handle on them, and that was one of the key objectives in our digital transformation journey.
Okay, great. Now, from an IS standpoint, Pariksit, you already spoke about one of the challenges or limitations that you have is from a technology standpoint, right? So how you're bridging, but also see one is the technology, the new technology that is coming up, etc. But on the initiatives, of the line one, how do you provide more assurance to the audit committee and the board?
So obviously, one is close-knit integration with all the major projects, transformation projects that are underway in the company. Because when we speak about digital transformation, as Bhaskar said, it involves a huge management of change. Right? It's not just the systems that are changing, but there's also business processes that change. And along with that, the soft factor is the mindset also has to change sometimes for people. Some people are very used to doing things in a certain way, even though it's manual, even though it's probably time consuming. They've been doing it for years. Very, very difficult to break that resistance and get them attuned to the new way of doing things. So one thing we do a lot is we perform advisory and consulting reviews, because we don't want to go in while this transformation is happening. There's already a lot of pressure, and you don't want to add to that the pressure of an internal audit coming in and looking at it. Right? Because the business is already under pressure, and they'll be like, okay, now here come the auditors. Now they're going to rate me on this. So we say that, okay, we're not going to rate you. This is not a rated audit. This is an advisory. It's kind of a consulting engagement where we'll help you set things up the right way. Right? So that is that is gaining more traction, and I think people are seeing value in that. And speaking about our own digital transformation, for internal audit, we have set up a dedicated data analytics practice, and this has been over the course of many years. I think being a tech company, our management had the foresight to invest in a dedicated data analytics practice for internal audit. So we have a mix of functional and technical experts who provide ongoing support to our audits, whether it is customized analytics for each individual audit, or it is building dashboards for continuous monitoring, or even actually we have made some forays into automation now, where we are trying to automate some of our testing, data extraction, and things like that, which can save up time.
Okay, that's interesting. So Pariksit, I have one more question in terms of when you spoke initially about one of the impediments or challenges that you have is on the technology, right? Digital technology. What is that, from a people standpoint, from a upskilling or reskilling, what are those initiatives that you're taking to make sure that you bring the workforce to the required state? Now you see that various companies, right, like IBM or any other companies are offering a lot of courses to their people and making sure that they're tech literate. What is that is happening in HP? Can you throw some light?
Yeah, certainly with an internal audit, like I said, since we have a dedicated data analytics practice, it's a team of specialists. It's a mix of people from a software engineering programming background. You also have accountants, CAs, CPAs, and so on.
Right.
And we do provide them access to some of the sites where they can go and constantly upskill and reskill themselves. So that is anyway there, sort of a formal route. But beyond that, I would look at it broadly and say, analytics is not something restricted only to our data analytics group. Analytics is for everybody in internal audit. So even the traditional auditors,
right,
we want them to develop an analytical mindset. So we have started off a program recently. We kicked it off. We call it the Analytics Champ program, where we put out a open offer. We said from all of our audit teams, for those people who are interested, they can come forward and work with our analytics group, wherein they can provide the functional expertise, because they they know the business very well. They know the businesses, functions, business processes,
right,
and they can identify the areas where we can look at automation opportunities or advanced analytics, dashboards, etc. And they come back and work with the technical experts in my data analytics group who are pros at coding and that kind of a thing.
right.
So we want to kind of develop that interest and also pull in the traditional auditors more into developing an analytical mindset. So apart from the trainings, that's something else we are doing to have that mix and match and build analytical literacy, maybe if that's a term.
Great. So in addition to one of the risks that I think the directors highlighted was regulation. They said market regulation. So many, especially from a regulation standpoint. I mean, ESG is also kind of a regulation. But so Manjula, what is your thoughts on the impact of this? The regulation changes, etc. And how do you make sure the company meets the regulatory requirements and provides that assurance to the directors and the board?
Nagindra, as you open up the discussion in Sri Lankan context, this is the most difficult time in regulatory aspect when it comes to the forex flow. We have a dollar company, like the government is struggling with the dollars, and the totally different situation in the country. But in my take on that is, then again, basically, you have to be with your fundamentals. Basically, we are a listed company as well as governed by a separate economic zones called BOI. This is given on a separate law within Sri Lanka. Even when we are operating in India, that is a specialized economic zones, not more into the generic law. There is a implication, but there is a softness on the some of the things also with the kind of opening what they have given to us. So what I'm saying, we have to be with basics, and if we know exactly where we are heading, and we have a bulletproof system, we should be able to cope up. Especially on the last few months, we have a huge pressure on how are we converting our dollars into Sri Lankan rupees, and what's the reconciliation, and are you dealing with in the way that they are stipulated? Of course, we were sound enough on that in our system itself. So what I'm saying again, the basics, if you are in line, you should be able to cope up. Because that's anyway challenging. You can't stop it, and even the politicians, you all can understand their expectations are totally different and vulnerable. But if you are on your basics and if your systems are okay, you should be able to cope up. for us, as well up to now, the challenges are there. Of course, the meeting the expectation also in very high level.
Right. Great. So we spoke about the people risk. We spoke about the strategic risks. We spoke about digital technology, which occupied most of the amount of time. So my any thoughts from the directors, in terms of overall, if you were to summarize, so your key risks were digitization, COVID, especially IT policy, focus on the IT policies, impact on supply chain was one of the topic that you had. Now, meaningful insights, what you get from the auditors, right? Then you had regulatory requirements. Fraud risk is something which we spoke about. Enterprise wide collaboration, in terms of internal auditors and other risk functions which Pariksit spoke about. Now, whistleblower, related party, etc. So now, my question to Rupa and Prathimar, so maybe I start with Rupa. So overall, how do you summarize, so in your conclusions, if you were to say you heard from the internal audit side, their limitations, overall, if you were to say that these are the 10 things that you need, how do you make sure that you're getting that value, in terms of what is your advice? There are so many upcoming auditors, or the people on the call. So what are your some of the key statements?
So basically, the biggest deterrent in not being able to fulfill the audit committee expectations, to my mind, is a conflict of interest. The chief audit executive really has to report into the audit committee, but for administrative purposes, reports into the CCO or the CEO or whoever, right? So his or her incentive structures, etc., are based on somebody else. And I think developing a trust with the audit committee chair and developing a rapport and having that alignment of interest with the audit committee, because at the end of the day, both of us are interested in building sustainable organizations that last, right? So if you have that alignment of interest and that trust that we are both going for the same purpose and there's nothing to get scared of, I think there will be an open dialogue, and that open dialogue will help us. At the same time, I think it is the audit committee's duty as well to see that you give them adequate support in terms of technology, budgetary approvals, skill sets, whatever they need, we should be able to give them to be able to expect something in return, right? So it's a two-way process, I think, which makes any relationship successful. And I think both of us need to work on this. So it's not only one person trying to live up to the expectations of the audit committee. I think the audit committee also owes a responsibility to the internal auditor to see that you provide them that adequate support to make sure that the organization respects the internal auditor as well, right? Because otherwise nobody's going to look up to them. So that is important as well. So it's a two-way street, in my opinion.
That's great. Prathima, any thoughts? Any other points you want to add?
So from the discussions, the points that were given by the panelists, very interesting points. So my takeaway from that was that as board members, we need to look at the composition of the internal audit team, whether they are from within the company or they are external internal auditors. And we should see that they have the requisite expertise. They should not be like analog internal auditors. They should be more digital oriented. And we definitely need to look at that. And we need to give, if they're within our organization, we definitely need to give them more training, which we don't look at it as of now. And the third part is that while we are so busy and engaged with, digitizing and automating our entire processes, whether it is operational or whether customer facing or manufacturing or whatever we are doing, we should also look at how we can empower the internal audit team with the appropriate digital tools, which we are not doing right now. Not many of us are doing. Maybe the larger companies like HP and all that were so oriented to it might be doing that. And then, so across the board, we are saying we should all become more analytical and we should have tools for that. We should also ensure that our audit team, whether internal or external, has it with them. And we should actually assess whether they have it or not, whether it is coming from the external team or from the internal team. So these are my takeaways from after listening to this wonderful panelists.
Great. And Bhaskar, your thoughts. You are a line one of defense. The management. From what is the support that you would extend to the auditors so that they make sure they fulfill the board agenda? What are your thoughts?
Very interesting. I mean, I've heard the board perspective. I've heard the internal audit perspective, and I think I'm in the middle of all of this. The way I look at it, I look at internal auditor as one of my main collaborator, one of my main supporter. In fact, I take internal audit very seriously as a CFO. In a sense, it's driven across the organization that the CFO is partial to the internal auditor when it comes to their own people, because I know the difficulty. I've been an internal auditor myself, and I know the difficulty that if the CFO does not provide the support, and if the CFO treats the internal auditor as an adversary, I mean, it's a no-go. And that sort of a collaboration where ultimately, like Rupa rightly said, and I bring internal audit committee also over here, that it has to be the one objective that we make the organization more safer. We control the risks better. We build a more sustainable and a more strong internal control within the organization. And that I think is very important. And like I told you before also, that we for instance don't have an internal audit department within. We rely on external agencies to do our internal audit. We actually look at what are the strengths, and in fact today we have dual internal auditors, where one agency looks at all the internal controls and process, etc., including a very good oversee on our project expansion project. We also have another agency which is specialized on cyber audit, who give us a maturity score on our cyber preparedness. What are the things that we should be looking at? A zero trust sort of a situation on cyber, because we are very vulnerable to cyber attacks. And from that perspective, I think this is one of the key roles, and organizations should take them very seriously, and it should be collaborative. It should never be adversary. And I think Pariksit also sort of referred to it while speaking, actually.
Right. So Pariksit and Manjula, any concluding remarks before I, there are a few questions, I think a couple of questions, before I open up for the participants. Takeaways for the participants, there are quite a few budding internal auditors, mid-level internal auditors, senior level professionals as well. So there was this insight provided by the directors, in terms of developing trust, providing more independence, and making sure the composition of internal audit, training them, empowering them. Obviously, these are very valuable insights. Any thoughts, closing, comments from your side?
Yeah, certainly wonderful thoughts from everyone, Nagindra. I think if I have to summarize, as an internal auditor, I feel these are challenging but interesting times for us, because we can really add value, right? Because the expectations are so high, it also makes our job more interesting. We are not merely compliance guys now, right? There's a lot of expectation for also identifying risks as well as opportunities from internal audit side. So that makes it all the more exciting. And the way we can do it is by optimizing our talent pool, embracing more digital technologies, and building business acumen so that we can partner with the business and prove to them that we are trusted advisors. We are not here to act as a policeman. As long as we can do that, we can truly add value. And that's what excites me as an internal auditor today. Thanks. That's it for me.
Manjula?
Yeah, by listening to all the panelists, even my takeaway, even the conventional internal audit could be with the control environment where when you be with the IPPF, because it will be looked after. Then we have to look at the technical strength and the technology where we can move along. And one last, the auditor should be collaborative, because we have to be with the ERM, enterprise risk management, be hands on hand, because at the end of the day, we are employees. I know that the independence has to be maintained. That's all right. However, we have to be more collaborative. And end of the day, the customer is the key. And all the organization is customer driven, customer centric. So all of us get paid on customers. So we should be able to look after the value which is derived from the customer. So partnering, collaborating will be the future, in my opinion. The fundamentals, of course, you have to make from the control environment, keep intact. Thank you.
Great, thanks. This is great insights from all sides, line 1, line 3, and even their directors. So this is a very insightful session. So there are a couple of questions, before we close the discussion. So this is for Prathima from Sunali Gupta. In context of collaboration between ERM and IA with respect to process risk, how to consider the risk of regional or country level process risks which may have lower overall ERM risks? So basically, I think what the enterprise risk and internal audit risk, with respect to process risk, how do we consider country level and regional level built in, so that the overall, I think the risks which may have overall ERM risks. So basically, one is to look at a country level or a region level or at a worldwide level. I think that is what is Sonali looking at. Any thoughts?
Yeah. So, when you have global operations, like we have, at least I'm from State Bank of India, so at least I was, so at a very senior level. So, so you have your regional risk. Now, even if you look at, let's look at even India. Let's forget about global for the time being. Even at in India, so you do have regional risks because each state, it's divided into various divisions. Each state or each division has its risk, which is documented, which needs to be documented. And then it goes up the ladder, and then we look at those very macro risks, which the board has to look at. Right. So, when you make a list of risks, because each function, each region will give a list of risk under various functions. Then it gets a weightage. Then it comes up, it goes up, and then finally you arrive at 10 topmost risks on various parameters. That there is a format for that. There is a framework for that. And then you arrive at the risk. So you may just find that some of the regional risks actually become the topmost at the country level. They become country level risks.
Great. Hope that addresses, Sonali, your concern. The other question is from Ankit Thakkar. This is, I think, is for Pariksit. So the question is, to establish the image of IA as a trusted advisor and not a policeman, what are your views on presenting only problems or exception to the board or audit committee? Or should you also start presenting a holistic, even a positive assurance as well? Has HP started looking at a holistic or overall assurance rather than exception reporting?
Yeah, as I alluded earlier, yes, we have made it a practice to also look at highlighting the positives wherever we can. Now it's a little dangerous sometimes. We have to understand that it's not as straightforward as it sounds, because as auditors, if you say something, people are going to hold you to it. So you have to make sure that you really have the courage of your convictions if you're putting something out there as a best practice. But that said, our CFO always says that internal audit is the function which has a helicopter view of the entire organization, right? So we have that aerial view. And the point is, if you notice best practices somewhere, it is imperative upon us to highlight that so that it can also be implemented elsewhere, right? And the other way to look at this, the flip side is, when we do find observations or issues, we have to try to avoid over sensationalizing it, because as auditors, sometimes we get so excited that we have found an issue. We might over sensationalize it, or we might try to quantify it and put in some slightly exaggerated values as well. So as long as we avoid that temptation, and as long as we have an open conversation with the business before we write them up, and we hear out all their points and get their agreement to the facts, to the issue, and to put an action plan in place, I think that builds credibility, right? Because becoming trusted advisors is not just singing praises of the business. I don't think we can do that completely. But as long as whatever issues we are putting up, we need to have in spirit and in letter agreement with the business that they agree that this is a problem that needs to be fixed. And as long as they do that, The other small thing we also do is we acknowledge in the audit report that management has proactively started remediating these issues. So we try to also give them credit, right? And there's also another thing, just to quickly round up, there's also a process called the self-reported issues process that we use, where before every audit, we give the management an opportunity to self-report any issues that are already known to them. And what we do is we validate those issues. We try to see if we can help identify the root cause. We try to quantify the issue. And if it is finally included in our report, we clearly give credit to the management that this was something they were aware, they self-reported, and they're working on it. So that also builds that partnership and makes them feel that yes, their voice is being heard. It's not just somebody coming and pointing out their faults. So these are some of the small ways, softer ways in which you can build that trusted advisor mindset and value.
Right. And the other follow-up question was, should we not start presenting a holistic and positive assurance as well? See, most of the time our reports are exceptional based reports. So I think from that standpoint, what are your thoughts?
Yes. So while we don't do it on a report by report basis, but certainly on a holistic level, our audit committee has a business review. Every time they have an audit committee meeting, they review one of the business units, one or more of the business units. And always, I mean, it essentially is the business unit head and the CFO coming and presenting to the audit committee. But there is also an internal audit section there, where internal audit gives an opinion on how that business has been faring from an audit and compliance perspective. So there we do try our best to give a holistic view. For example, if there have been a few audits, maybe like green rated audits, we give a positive assurance as well. We tell the audit committee this is the coverage we had for this business, and they have come out with flying colors, right? So the positive assurance when there's a low rated audit, that also acts as a positive assurance. So that way we try to give a holistic picture.
Great. No, that's really helps. Any other questions from participants? Okay, looks like there are no other questions, so we'll wait for a minute or so, and people can obviously send your questions to us in case you want to respond. We're happy to get back to you. I think great. So overall, I mean, it was at least a very insightful session for me, and I heard from CFO, I heard from directors, I heard from internal auditors. A lot of learning for me, and I'm sure that people, the participants, would have learned quite a bit, in terms of what is that leaders are thinking and how is it, happening in large footprint companies like HP. So great. So it's an interesting session. Any other points, or can we wrap up the session? Any other closing comments?
Some closing comments, if you don't mind, Nagindra.
Sure, Rupa. Sure, Rupa.
I just thought of some things actually. I said, internal audit needs to create value, not just protect value. Be the conscience keeper and the eyes and the ears of the audit committee. As an internal auditor, understand the business and the value drivers. Focus on the big picture and the changing risk landscape. Be the go-to person with unblemished integrity and grit, and stand up for the right. Take the right way, even if it is the difficult way. Be a good listener. Be resilient. Keep learning and adapt to more effective ways of working. Use technology to enhance your capabilities and communicate effectively. Internal audit is a crucial pillar of corporate governance. Take responsibility. That's what.
Sure, Rupa. Nice
good
work.
Rupa. Very good.
Great. Great. So thanks, the panelists and all the participants. Thanks a lot. This is very insightful, as I said. So if there are any other questions, we will get back to you. And I hope, we'll, as an auditor, and I'm personally talking, so we will hopefully meet all the expectations, and we'll make sure that we fall within the definition that, the Rupa explained at the end. Thanks a lot, and have a nice weekend, and stay safe.
Thank you. Thank you, Nagindra. Thank you all.
Nagindra.
Thank you, everyone.
Nagindra and the team.
Bye.